Hello, everyone, and welcome to At Barrons. I'm Andy Serwer, and welcome to our guest, Steve Hasker, CEO of Thomson Reuters. Steve, so great to see you. Thanks for joining us.
Hi, Andy. Thanks for having me.
So lots of people know Reuters. It's about only 10% of the company, though. So tell us about the other 90% and give us sort of an outline of the company.
Yeah, sure. So Thomson Reuters, 26,000 colleagues spread across the world, a little more than $7 billion in revenue, the vast majority of which comes from serving professionals, principally legal professionals, tax and accounting professionals, risk, fraud and compliance professionals, and also, of course, the news media industry and the professionals therein. And essentially what we do is, and our tagline says, clarifying the complex. So as the number of rules and regulations of laws go up and the complexity with complying with the legal side of things, with the tax, accounting, audit, risk, fraud and compliance, increasingly ESG, as the complexity goes up for companies and their advisors, we provide content-driven software, content-driven technology that helps them navigate that. And so it's a pretty big tailwind because that environment gets more and more complex, and the demand for our content-driven technology is increasing, and that's an exciting place to be.
Are there specific brands you can point to, or they're all sort of under the Thomson brand?
No, so Westlaw is one of the best known. Practical Law is another one. We recently acquired Casetext, which brings the CoCounsel brand, which we're very, very excited about. In our tax and accounting business, we have UltraTax, we have Go System Tax, and then the corporate side of things, we have OneSource and also Clear. That's very important for the US government and a number of our corporate customers. So underneath that sort of Thomson Reuters umbrella brand, we have a series of, we think, pretty important product brands and franchises.
And the size of the company revenue is roughly?
Just over $7 billion.
Right. And a long history there. Thomson's the Canadian company. You guys are based in Canada,
yes,
right?
Toronto.
And Reuters was in the UK, an old UK business, much older, of course. TRI, the ticker in New York, is a bit complicated these days, I think it's fair to say, just in terms of how some things, you have some moving parts with regard to Blackstone, Refinitiv, London Stock Exchange. Can you walk us through that, please?
Yeah, so TRI, Thomson Reuters, is owned just under 70% by the Thomson family and their family office, which is called Woodbridge.
But publicly traded.
Traded. So the remaining 30+% is traded both in New York and in Toronto. We have a great institutional shareholder base both in the United States and in Canada and beyond. A number of years ago, we sold our financial and risk business, F&R as it was known. It was rebadged Refinitiv. We sold 55% of it to Blackstone, and Blackstone held it for a period of time as a majority shareholder, with us in the minority. And then we and Blackstone sold that on to LSEG.
London Stock Exchange Group.
Exactly. And so we became, Blackstone and Thomson Reuters became a large shareholder in LSEG. And over the last number of years, we've been selling down that stake.
Right. And so talk to us about selling down that stake. Why didn't you just sell it right away? And why are you selling it in increments like this?
Yeah, well, it was a large, it was a large deal, and it involved a series of lockups. So there were periods after which we could only sell, bit by bit. And so the last of those expires in the first quarter of 2025. So we've been gradually selling during that period of time. We've said from the outset that this is a financial stake for us, not a strategic stake. So we were very clear from the outset that we would sell when we had the opportunity to do so. And LSEG has been doing very, very well. So it's been I think, a smooth process for both LSEG, Blackstone, and also us.
So then LSEG owns Refinitiv?
So LSEG bought the old financial and risk business that was called Refinitiv, and has integrated that fully into their platform.
Right. So, and that's a database service that companies, all kinds of companies around the world use, and it's going to be owned by LSEG, or is owned by LSEG going forward.
Yeah,
right?
and competes with Bloomberg amongst Bloomberg and FactSet and players like that, amongst others.
Right.
And of course, the Reuters news feed is a very important part of that service. So Reuters is the news service that helps power that financial and data business.
I know Reuters, as I said, is a small part of the company, but it's an important part, maybe the most high-profile part, and important given things going on in society today. And I know that you're proud of the fact that it's kind of right down the middle. Talk to us about how important Reuters is.
Yeah, so Reuters is governed, all of Thomson Reuters is governed by what we call the trust principles. And just a very quick history lesson around those. It was about 1941 when the trust principles were formed by the Reuters board, effectively to govern all of the news and information that was produced by the Reuters team across the world. And essentially it required that anything under the Reuters brand is independent and fact-based, it's triple-checked, it's unbiased, and is of the highest quality reporting and journalism. And when the Thomson Corporation bought Reuters, the trust principles came with that acquisition. And what we've been able to do is in a sense maintain those trust principles and have them as a guiding principle behind all of the information we produce and all of the software that we embed within our customers. And we think it's an incredibly important part of the company. We think it's a competitive differentiator. It is managed, the application of those principles is managed by an independent board called the Thomson Reuters Founders Share Company Board, chaired by Kim Williams. And so, as we think about the integrity of the news service, as we think about the integrity of our legal, our tax, and our risk-related information, let alone the application of AI, the trust principles are a really important governing set of frameworks for us.
Switching back to the other 90% or so of the company, what's the growth strategy for Thomson Reuters?
Yeah, so we had an investor day on March 12th here in New York City, and we talked a lot about this. So the first is that there's a very significant tailwind behind our business, this idea of sort of the complexity associated with compliance. The second is that generative AI is not new to us. So we put a functioning search algorithm on the front of Westlaw back in the early 1990s. So before Google was in the search business, we were in the search business. So we have thousands of very, very talented data scientists, engineers who relish the opportunity to harness generative AI. And that is really very helpful. Beyond that, 80% of our business is centered in the United States. So we see a pretty big opportunity to grow internationally. We see areas like ESG and risk, fraud, and compliance as potential for us to grow into. So the combination of the tailwinds, generative AI, and the idea that we can become something of an operating system for a law firm, for a tax and accounting firm, for a head of tax or a general counsel's office provides us with, I think, a pretty interesting growth path going forward.
Bunch of things to drill down into, but first I want to ask you a theoretical question, which is this, Steve. Has it ever been the case in the history of the world that a society or country has gotten less complex?
Well, certainly when we look at the number of laws and regulations being passed in every country in which we operate, that is going up.
Yeah, I mean, it always seems to be the case, unless, of course, there's a decline of the civilization, like what happened after, the decline of the Roman Empire, right? That seems like a pretty big tailwind.
So number of laws, number of tax and accounting regulations, the complexity of audits, entirely new forms of sort of regulation and governance around ESG and climate and so on and so forth. So, Andy, I think you're right. I mean, we just look at this as something that just gets ever more complex, and it's not a realistic or scalable option for companies to just add more headcount to navigate that environment. They have to rely on technology.
There is a bit of a backlash against ESG, though, for instance. Would that make less rules promulgated or striking away rules? I
mean, I think what you're seeing is, a number of years ago, the sort of emergence of ESG as an entire discipline and area of research and thought. And I think there's always a natural sort of reversion as people perhaps saw some of that as an overreaction. It obviously has real implications for a number of industries, and those things need to be moderated. They are being moderated. In my view, it's here to stay. The question is, what's the sort of complexion and the nature of ESG regulations and sort of broader thinking by companies and their advisors?
I know AI has been both a drag on the stock and a boon on the stock. At one point, there were fears that AI was going to sort of disintermediate your businesses. And now it's perceived more like, well, it's an incredible boon to your company. Which one is it?
Well, I think what happened in the early days, of 2023, when ChatGPT 4 came out, and of course passed the bar exam as one example, there was a sense that, well, could this sort of replace some of the content-driven technology that companies like Thomson Reuters provide? Well, then very quickly, we learned that the key to success in a generative AI environment is unique and proprietary data sets that are calibrated and are correct. And we have more of those than just about anyone. And so that's where you saw the pendulum swing a little bit. I think there was a sense that, well, what could this be? And there's always that moment of potential disruption, to a recognition that these models need to be trained, and they need to be trained with the best content. And we have that in large part.
How does your company keep track of all the changes and all the rules all around the world, and particularly now when there's more nationalization going on, which is sort of the breakdown of international globalist pacts, if you will?
Yeah, and it's a great question. So we discuss this very regularly as a management team and as a board, and what the commitment we've put in place is to continue the depth and breadth and intensity of our investment in content creation, and content collection, curation, and creation, whether it be the laws that are being passed, whether it be the cases that have been decided, the tax and accounting regulations, the audit regulations, and so on and so forth. We will not blink when it comes to the investments in both people and technology to support those people in that collection of information, because we think it's a competitive advantage. We think it's impossible for anyone to easily catch up to us as long as we continue to invest sufficiently.
Who do you consider to be your competitors, Steve? Obviously, Dow Jones, our parent company, is a competitor to a degree. Bloomberg. Where do you sit in that competitive set?
Yeah, I mean, we have a number of competitors. So companies like RELX and Wolters Kluwer, as you mentioned, Dow Jones and Bloomberg. In the risk space, Moody's, companies like that, and then of course in the news space, it's the Associated Press, it's AFP, and the photography side, it's Getty Images. So we have pretty robust competitive markets.
Does it make sense to be headquartered in Canada still? You've got a Canadian headquarters, big U.S. business, UK-based news company, maybe. How does it all work that way?
Well, I think Reuters is truly global. Reuters have a presence here in New York, 200 bureaus across the world. The sort of 170-year-old heritage is London, but it's for many, many decades been a truly global business. The great advantage of being headquartered in Toronto has been our ability to create a tech centre there and attract fantastic tech talent, whether they're data scientists, software engineers, experts in generative AI. And so that has been a fantastic play for us. We just keep investing against that.
What about operating in authoritarian or closed societies? And of course, big, maybe getting bigger, Russia, China, Iran. How do you operate in those countries, both on the Reuters side and on the other parts of the business?
Well, the professionals side of the business, so the big three as we corporate, legal, which is legal, tax and accounting, and corporates, tends to be concentrated in North and South America, parts of Southeast Asia, Europe. So less exposure to some of the countries you mentioned. Reuters, of course, is everywhere, and it's a challenge. I think we have dozens of journalists operating in the many of the countries that you mentioned, and their work is difficult and dangerous at the best of times. We do our best to look after them and support them, But part of the proposition is that Reuters, in many cases, is still reporting the news in places where everyone else has departed. So it's a very important service to both the local communities in which these journalists live and work, and also to the global community to make sure the news gets out.
Is there ever a conflict of interest, Steve, between, say, the journalists operating in one of these countries and you trying to sell services to an authoritarian government and, there's a quid pro quo that is asked?
No, we'll always put the integrity of the information that's produced ahead of our commercial interests. And I think if you look at the history of the company, we've consistently done that. And of course, if we were ever not to do that, then the viability of our news service would be reduced. So that's a very important principle.
Right. Media stocks have not been a good place for investors, but your stock has been pretty darn good, up 150%, I think, since you became CEO in March of 2020, outpacing the market. Why is that?
Well, I think we're a tech stock, not a media stock. I mean, notwithstanding the 10% of the revenues that come from the Reuters news business, we very much are a content-driven technology play. So where we compete is where we take unique and proprietary content, we add AI and machine learning, and we deliver it through best-of-breed software, which is typically deeply embedded in our customers' workflows, whether that's a law firm, tax and accounting firm, a general counsel's office, and so forth. And so the market has seen us, I think correctly, as a tech player rather than a media player. And obviously the distinctions have been pretty clear in terms of performance.
Tell us a little bit about yourself, Steve. I know you're a consultant. Also, why you like running this business in particular.
Yeah, so I, despite my cleverly disguised accent, I grew up in Australia. I spent 11 years at McKinsey in New York and thoroughly enjoyed that. Was a partner in the sort of media and tech and business information space. I think what's fascinating about Thomson Reuters is the quality of the franchises that have been there for long before I joined. This is a business that has 26,000 people, the vast majority of whom have advanced degrees and are extremely bright, diligent people. So our culture comes with a level of intellectual rigor, which I think is rarely found. It also comes with a very friendly, collegial nature. When you walk into a Thomson Reuters building, I'd like to think that you are greeted by somebody who wants to look after you and make sure you enjoy your time in that facility. We look after each other. There are many, many godmothers and godfathers amongst our colleagues. And to that, I think we've really added a degree of rigor and discipline and performance ethic over the last number of years, which has yielded good results.
And final question, Steve. Make the case for investors as to why they should own the stock going forward.
Yeah, so we've got, we set out at our Investor Day on March 12th, elevated growth expectations for the next few years. So we'll move from around about 6% growth this year up to 8%, and we certainly aim to go beyond that by 2026. It really is a case of two things. Firstly, the tailwinds in which we operate, and secondly, the competitive advantages we bring in terms of the unique content, the talent, and our history of harnessing AI. And so with that, we think we can play a bigger and more important role in the success of our customers, whether they be lawyers, tax and accounting professionals, risk professionals, or news professionals. So we're looking forward to the next few years.
Steve Hasker, CEO of Thomson Reuters, thank you so much for joining us.
Thanks, Andy.
This is at Barrons. I'm Andy Serwer. We'll catch you next time.